No, insiders at companies do not have to plan their buys and sells ahead of time. This is the biggest misconception about insider trading at public companies. Now, there are a few rules about insiders trading their own company stock, but there are far fewer than you probably believe. The main rule is that if the insider has material non-public information, typically like big news going to come out about the company or acquisition news or that kind of thing, then they cannot sell or buy the stock. The other main time they can't buy or sell stock is right before earnings, which is also considered another like material non-public information event, because obviously stocks go way up or down on earnings. So you'll see executives do a lot less trading or basically no trading in the couple weeks leading up to earnings. However, besides that, they can basically trade whenever they want. Now, some will implement 10b5-1 plans, which is a schedule of when they're going to make trades, but they actually don't really have to tell you very much information about these 10b5-1 plans. They just say, hey, between these two dates, I'm going to be selling stock with no other real information. And most of the time, they actually will set limit prices for when they'll sell the stock. So they will basically be saying, hey, if the stock goes above this price, I'm going to sell some of it, but they don't tell you what those prices are. However, you can typically tell when all of a sudden an executive starts selling stock at like the same price or above the same price over and over. And this actually gives you a pretty good idea of what the insider believes the stock is worth and when it is overvalued.